What's up everyone, it's Karthik with MoneyVest. There is nothing stopping this market rally with just a few more weeks left in 2024. The markets are coming in hot and heavy and strong to close out this incredible year of gains of S&P 500 closing in and clocking in at just over 28% so far in this market rally. And the NASDAQ is also up a little bit over 30% year to date. 33.5% to be precise is how much the NASDAQ is doing. So hope you all are doing great. The NASDAQ here up another 81 basis points, just shy of 19,860. We got the S&P 500 just a little bit under 6,100, and the Dow Jones was pulling back a little bit on the day, just over 28 basis points, just a little bit under 44,650. But technology here and Max 7 continues to power through. So this right here is what the heat map looked like. I'm sorry, that's not the right one. This right here is the actual heat map for the market. Might as well be this right here because it almost always feels like we are just going to the moon. So I figured I'd put a picture of the beautiful moon because what it feels like. There's a lot of euphoria. There's a lot of greed in this market. I can tell you that much. There's a lot of euphoria. The sentiment is very, very optimistic, and it almost always feels right now, the last couple of days have felt, or at least the last couple of weeks I should say, since Thanksgiving, that we are quite literally sitting on the moon right now. So you got technology here, retail, financial services, media, everything pushing higher. Semiconductors were a little bit weaker on the day. The day gain for me was a little bit over 11,000, and the total gain is now sitting at 225,000. This is already now including for the options portfolio. I just figured I'd do it in one single portfolio and kind of show you guys what 2024 has looked like, and it is absolutely wild. This has actually been my biggest year in the stock market since 2014. Since the 10 years that I've been doing this, this was the biggest year in the market for me personally. So kind of very, very proud of that. And a lot of our community members are also hitting some great, incredible milestones, multiple millions in profits, and portfolios hitting new record highs. So it's actually very, very good to see that we're all coming together, supporting each other and participating in each other's journey. And it's very good to see everybody hit different milestones in their financial journey. So, if you want to get access to all the trade alerts, I'm sending out a lot of alerts on a weekly basis. We closed out some SOXL puts for a 96% profit, opened new ones for next Friday, collected just under $200 in premiums. And again, we've got a couple other very experienced, very knowledgeable, very smart traders that are also sharing their trades on our Discord. So you can also, access that with the link down below. Again, we'll love to have you on board. This right here is a little bit of a summary of my options portfolio, up at just a little over 32% on a year-to-date basis, and collected just under $9,000 in premiums, with capital gains sitting at just over $20,000 in the options portfolio. So again, link's going to be down below if you're interested in joining us. There's a few more spots left, and this is something that I mentioned in our Instagram. So my personal Instagram, by the way, you can follow me there if you want to with the link down below. I mentioned this in our on my Instagram post, is that your network is your net worth, right? So the people that you surround yourself with, it is so important to surround yourself with people that are doing better than you, so that you can actually learn from them and can actually grow, right? So it's actually a very personal analogy that I've always used, is that when I used to play soccer when I was a kid, right? So when I was younger, when I was a kid, I used to play soccer, and I've played soccer my entire life. Not so much anymore, but I used to play a lot, almost every single day. And one of the things that my coaches early on told me is that if you want to get better, play with players that are actually better than you. Play with older players, play with players that are more experienced than you, so that they'll push you to become better. And that kind of stuck with me, and it's always been that way, because if I wanted to get better at something, I would always surround myself with people that are actually doing it, that are living it, and that are doing better than me. And so that's why we've built this community, is because it is such a give and take relationship with everyone, because I am literally learning about futures trading now, because that is something that I may implement in 2025. That's something that I may focus on, trading futures and trading other commodities, and even other trades and other strategies that we can implement to have more strategies under our belt, right? It never hurts to have more ways to make money trading with different strategies. So that is why I absolutely love what we've built here. And again, if you want to get started, if you need help, we've got beginner friendly videos and tutorials and educational stuff, as well as very advanced and experienced traders and strategies. So there's something for everyone And I'm sure you're going to learn a lot of really nice things, a lot of great things from our community. So link's going to be down below. We'd love to have you on board. I'm not going to push it too much, but really just show you the results, right? I'm really going to show you the results. I'm going to show you the numbers. I'm going to show you exactly what our members are doing and let you make the decision at the end of the day. So jobs numbers came out as every Friday, first Friday of the month, they come out. We increased the jobs by over 227,000. So you can actually access this on our platform. So if you come over to market calendar, go over to economic calendar, remove for low and medium impact items. This right here is how many jobs we added, 227,000. With the unemployment rate now sitting at 4.2% as expected. The consensus was 4.2. We're now sitting at 4.2. The Michigan consumer sentiment came in at 74, slightly better than what the expectations were at 73. Now, given how strong this market momentum is, there's a lot of analysts and strategists now coming out and saying that 2025, there may be a little bit of a pullback because there's quote unquote too many bulls. And Ed Yardeni, I kind of have a lot of respect for him because he's been, very, very data-driven, very research-oriented analyst. He says there may be a pullback to start 2025 because there are quote unquote too many bulls. And there was another report that next week's inflation data could derail the market that's priced for perfection. So I think it goes without saying that this is a market right now which is very optimistic. There's a lot of sentiment to the upside. There's a lot of euphoria. And there's a lot of liquidity flooding into Magnificent 7 stocks, right? The top 7, the big tech and the Max 7 are really what's pulling this market higher and higher. And how do I know that? Is because if you come over to the market breadth, right? I showed you guys this in my previous video. It continues to get worse. If you take a look at percentage of stocks that are trading above their 20-day moving average, 20-day is like 1 month. 1 month average prices. What percentage of stocks in the S&P 500 are trading above their 1 month average prices? Less than 47%, meaning less than half the market is trading below their 20-day moving average. In other words, majority of the S&P 500 stocks, more than 50% of them, are trading below their 20-day moving average. So that just goes to show that this is a market that is very, very narrow. It is a very concentrated market, primarily being driven by just a handful of stocks, literally just a handful of stocks. And another way I can show you that is if you come over to market snapshot or market concentration, and you'll notice Magnificent 7, once again, $141 billion worth of gains. And if you take a look at the market cap in terms of the weight in the S&P 500, it's also increasing. This number has gone up like from 30s to now almost at 33%. This number right here has also gone from like 34, 35 to now 37.5%. So that is a significant increase in the market cap, in the weight of these companies within the S&P 500. And that just goes to show that this is a market that is being pulled forward very much by just a handful of select names, which is, of course, your big tech, your Magnificent 7 companies. And you can also kind of see that from the performance on a year-to-date basis from these stocks here. You can see that Comm Services is leading the charge here, 39.5% on a year-to-date basis. Financials have done really well, so they're also up over 34%. Then we've got consumer discretionary, that includes your Tesla and your Amazon. Comm Services includes your Meta and your Google. And then, of course, you've got your technology, which, by the way, was underperforming utilities up until just a few days ago. It has now finally taken over utilities, which was now sitting at 26%. Technology is just under 27%. So this includes your Nvidias and your AMDs and your Apples and your Microsofts, because technology is very much semiconductor focused and software and hardware focused. So it's now up 26.8%. So a lot of that momentum, right? So even if you take a look at the last 1 month, 1 month performance, right over here. So let's take a look at last 1 month. What is up? Discretionary, 12.17. The second best sector, of course, is going to be your comm services, a little bit under 7%. So it's very clear. It is very clear what's actually moving this market higher. It is your big tech, your Magnificent 7, right? And of course, you kind of sprinkled in your Palantirs and your SoFis in there that have also done really well. But all in all, this entire market that is now trading at 25 times earnings is being pulled forward by just a handful of select few big tech Magnificent 7 names. One more thing I want to mention is food for thought. Palantir is now officially trading at a valuation of not 20 times sales, not 40 times sales, not 60 times sales, but a whopping 80 times sales. 80 times revenue is what Palantir is now officially trading at, considering that it was one of the leaders in the market here, S&P 500. So it was up a little bit over 6.22%. hitting yet another all-time high of $76 per share. Huge congratulations to everyone who's been trading and investing in Palantir. A lot of our members have been bullish on Palantir for a really long time. They've been investing heavily in this company, and they are now absolutely crushing it. The patience and the hard work and the discipline is finally paying off, and the company now just to insane levels. And again, caution is very much needed at these levels, but it's the market sentiment. Euphoria and greed has fully taken over some of the stocks here. And again, 80 times sales is just mind-blowing to me for a software company like Palantir. But anyway, so we do have a lot of things still coming out. So next week, we've got the inflation numbers scheduled for Wednesday. So keep that in mind. Next week is going to be very critical. I'm flying back to Dubai later this week, so I'll be back to live stream inflation numbers and the FOMC meetings. So live streams are going to restart starting next week. But this right here is a very, very important week where inflation is really going to dictate how we do rest of December. And of course, we got the FOMC meeting coming out on the following Wednesday, which is going to be on December 18th. FOMC economic projections, which is a summary of economic projections, as well as the press conference and the Federal Reserve interest rate decision. Now, I also want to go over to what took place over the last couple days at the White House, at the Capitol, which is, of course, the Doge meeting. Elon Musk and Vivek Ramaswamy want Congress to pass huge spending cuts, and that's a tough sell. And this right here is how they made their appearance. Elon Musk, of course, having his one of his sons on his shoulders coming into the Capitol Hill, which was, again, pretty crazy. But entrepreneurs Elon Musk and Vivek Ramaswamy have an ambitious agenda to cut federal spending with the help of their outside advisory council, which is the DOGE, which is the Department of Government Efficiency, which they have set up. But on their first joint visit to Congress on Thursday, the pair also likely saw some of the limits outside influence on the workings of the legislative branch. And the overall message was popular from Elon Musk and Vivek Ramaswamy. That is a smaller federal government, looser regulations, and a private sector approach to public sector have long been cornerstones of conservative governance. Now, this right here are some of the mathematical findings from the $2 trillion of slashing the federal spending. That's the goal between Elon Musk and Vivek Ramaswamy, but apparently it's already DOA, in other words, dead on arrival, because of the math that it comes down to. Of the $6.1 trillion that the federal government spent on in 2023, $3.8 trillion was already off limits for cuts on day one because it's legally obligated to go towards the mandatory spendings such as social securities, retired workers, Medicare coverages and veteran benefits, all that. So $3.8 trillion of the 6.1 is already earmarked for some of these legally obligated programs such as Medicare, Veterans Affairs, and Social Security. After that, $650 billion was set aside to pay the interest on the national debt, which is now going to be approaching closer to $1 trillion, which is, again, mind-blowing in itself that the government is paying $1 trillion of interest on the debt that it already has. And that leaves us with $1.7 trillion, and of which $805 billion is spent on national defense, right? Which is largely untouchable pot of money. And finally, the remainder is divided up on the federal departments that perform much of the visible daily work for the government, agencies like the NASA, FEMA, and Customs and Border Protection. So there's really just not a lot of big piece of the pie that they can really cut down on when it comes to government spending. So, it's going to be quite interesting to see how they kind of tackle this problem. But in my opinion, I think it really comes down to a few different cuts around, or really just an aggregated of a lot of smaller cuts, because I was listening to this interview from Vivek Ramaswamy talking about how the government is really spending a lot of money on a very irrelevant and unnecessary research studies and conducting a lot of these really surprisingly weird projects. And so it really comes down to kind of really eliminating all that wasteful spending, and it's going to be an aggregate of a lot of small spending cuts that's going to lead to some of the bigger differences that we may see when it comes to the Department of Government Efficiency. Now, apart from that, again, I'm not going to get too political here, but of the $805 billion that goes towards the national defense budget, a lot of that, or maybe not a lot of that, but some of that we can argue is going to financial aid to a lot of countries that can also be potentially cut down on, right? Because at the end of the day, if we can't help ourselves, we can't help other people. And so I think that is really what the United States is going to start focusing on under Trump. And that's exactly what I think Elon Musk and Vivek Ramaswamy are going to be focusing on, is that we first help ourselves and then we help other people. And so a lot of the financial aid that's going towards other countries or our allies is potentially going to also come down as part of the government spending cuts that they're proposing. So again, time will tell what ends up happening here, but it's a very, very big task, that they're both taking on as the head of the Department of Government Efficiency committee, right? So the Doge committee that we have. Now, coming back over to the markets. Now, given where we are right now, if you come over to the Money Vest Index, we're still not near greed levels. And that might be surprising for a lot of you, but it's not for me because of the concentrated market rally that we're seeing. Because of this market being pushed by just a handful of stocks, we're not seeing the market breadth actually increase to some extreme levels. And so, that can be both a good and a bad thing. It can be a good thing because even if the markets do, let's say the Magnificent Seven stocks start to come down and other stocks start pushing higher, there's going to be at least some stabilization in that sort of conflicting, trends in the market, right? So let's say Mag 7 stocks start coming down and all the other, 400 something stocks start moving up, there's going to be something offsetting those two things. And even though Mag 7 controls majority of the market, over 30%, on a net basis, we might still be down in the coming weeks. We might still see some red or pullback or correction, but it may not be as significant as if everything is selling off at the same time. But of course, the bad thing is that a lot of that market momentum is dependent on just a handful of companies, right? So if they start rolling over, then the entire market starts selling off. So there's both pros and cons with that market breadth not being as strong as what it used to be, right? So of course, we've really seen this significant decline here since the beginning of December. It really has just been concentrated into just a handful of companies right now. So 3.82 is where we are on the MoneyVest index here. Volatility closing down on its lowest level. This was the lowest print on the VIX since July 2024, like literally since almost 6 months ago. This is the lowest close on the VIX. We are now under 13. And the reason why this in particular is a little bit more concerning is that if you come over to our volatility analysis, so if you come over to the VIX breakdown that we have done based on percentiles, I'm just going to wait for this to load here. I don't know what's going on. My laptop is just freezing right now. So let me see if I can open up a new window. And I just need a new MacBook, I feel. But bottom line is that we are coming down to some pretty low readings on the volatility. And this is actually in one of our, there we go. This was actually on our t-shirt as well. There we go. We just hit rare. We hit rare on the VIX. We are at 12.77. So we are in the 15th percentile for the volatility. So we are in the rare reading. Folks, we need to be very, very cautious here. I would, this is a very few times we've actually seen a rare reading on volatility. So I think it's really important to be very careful in this market environment, given how low we are on the VIX. And again, it's not very often that you see the rare reading on volatility here. So I think it's very important that we remain very cautious and very alert in this market rally, considering how much momentum and euphoria and greed we're seeing in this market right now. Bitcoin at the moment trading back up to almost $100,000, and we got crude oil coming down a little bit over $67 a barrel, so it continues to trade down. Huge resistance and a massive area of supply sitting at $72, $73 a barrel, and support level is going to stay put at $66 a barrel right now. So that's the support level that we're watching very closely on crude. And the 10-year treasuries are continuing to slide lower, back down to 4.15%. At the moment, they continue to sell off from its highs of 4.5%, so they're down about 30-40 basis points at the moment. Now, coming over to the markets, there's not really much for us to go over other than the fact that we are, again, very, very overbought on the RSI, the MACD. You can see the NASDAQ here, 72 on the RSI, the MACD also at 284. Same thing is true for the S&P 500. Very, very overbought at just a little bit under 70 right now, with the support level sitting roughly at 6,000, with, of course, the all-time highs coming in very strong. Now, I'm gonna be doing a Magnificent 7 stock analysis over the weekend, as always, for the Friday update being a little bit shorter. I will be going over in a lot more detail what levels to watch for Magnificent 7 stocks, as most of them are hitting all-time highs. So if you come over to our platform, you'll see under Market Snapshot, we've got pretty much most of them at all-time highs or within a dip. And it's very nice to see this Tesla in a pullback now. After such a long time, we are finally well within 6% of all-time highs for Tesla. And what's also interesting is that Tesla's gain today on the market cap basis was exactly $69 billion. And you just can't make this stuff up. So there you have it. Rare VIX, weak market breadth, very concentrated and narrow market. Jobs numbers coming in strong. 4.2% is still a pretty low reading on the unemployment rate. Next week, we've got inflation, and we are going to be very cautious moving forward in this market momentum, preferably getting ready with cash to deploy if the markets come down, give us a little bit of buying opportunities, or also selling calls at the same time to hedge for that potential downside. So as always, make sure that you drop a like and subscribe to the channel. Again, link's going to be down below if you want to join our MoneyVest community and, of course, get access to all the members-only videos, trade alerts, options videos, options portfolio updates in general, and again, keep track of everything that we're doing as a community, helping each other, supporting each other, and of course, learning together as well. That's the whole idea. As always, happy investing, and I will see you all in the next video.